Welcome to this video introducing your Health Savings Account, or HSA. Here we'll explain some of the key advantages, concepts, and details of this program. With an HSA, you actually have two plans working together, your Health Savings Account and a High Deductible Health Plan, or HDHP. You'll also benefit from significant tax advantages while enjoying the peace of mind of comprehensive health coverage. Let's take a closer look. With traditional health insurance, you pay monthly premiums plus additional out-of-pocket expenses in the form of co-payments, co-insurance, and deductibles each time you receive healthcare services. In years when you don't have many medical expenses, your out-of-pocket costs are still significant due to the high insurance premiums. With your high deductible health plan and HSA, you have the opportunity to save in your HSA and use the funds when you need them. Your first step is to enroll in the qualifying high deductible health plan. Next, you establish an HSA account at a qualified financial institution. You choose how much you want to contribute to your HSA for the year, up to the allowable limits. You'll use the funds in your HSA account to pay for eligible healthcare expenses in current or future years. Let's use two examples to explain how the HSA plan works for two of the most common scenarios: a sick visit to the doctor and filling a prescription at the pharmacy. You have a sore throat and decide you need to see your doctor. When you arrive, you present your health plan ID card. You generally pay no copay, and your doctor submits a claim to the insurance company for your visit. The insurance company will apply any discounts based on their contract with the provider and send you and the provider an explanation of benefits, stating how much the negotiated payment amount is. This is the amount you are responsible for when the provider sends you a bill. At that time, you would pay the provider using funds from your account using a special HSA debit card or special check. The amount you pay will count toward your deductible. Next, you go to the pharmacy to fill a prescription. At checkout, the pharmacist tells you how much the prescription costs. Remember, this is not a copay amount, but rather the full contracted amount for the medication. You pay that amount using your HSA debit card or special check. The amount you pay will count toward your deductible. Like any bank account, you need to keep track of what's available in your HSA account. If you don't have a sufficient balance in your HSA to pay for a qualified expense, you will need to pay out of pocket for the expense. Once your HSA balance has the necessary funds, you can reimburse yourself from the HSA account. During the year, if you exhaust your HSA funds, you would then be responsible for any remaining out-of-pocket expenses up to the annual deductible. Once the deductible is met, then the health plan pays its share of costs. By participating in the HSA, you'll also benefit from various tax advantages. First, the funds you deposit to your HSA account are tax-free. So for example, if you contributed $3,000 to your HSA and were in the 25% federal tax bracket, you would save approximately $750 in taxes. Second, the funds in your HSA grow tax-free. And third, money you withdraw from your HSA to pay for eligible expenses is tax-free too. Any unused funds in your account roll over from year to year. There is no use it or lose it rule. If you change jobs or health plans, the account stays with you. Funds you don't use for qualified medical expenses are yours to keep and grow over time. It's all your money. You can make contributions up to the maximum permitted by the IRS, and if you're age 55 or older, you're permitted to make catch-up contributions. To be eligible to participate in the HSA, you must be covered by a qualified high-deductible health plan. You must not be covered by other health insurance, you can't be enrolled in Medicare, and you can't be claimed as a dependent on someone else's tax return. In the HSA, eligible expenses include such things as doctor visits, hospital stays, prescriptions, dental and vision expenses, and much more. For a comprehensive list of allowable expenses, check your plan documents. Funds can be used for expenses for yourself, your spouse, and your dependents, even if your dependents are not covered under your HDHP. For rules regarding domestic partners, please see your plan details. You should keep all receipts showing expenditures from the HSA. If you exceed your deductible, you may need the receipts to send to your insurance company. You may also need them in the event of an IRS audit. You can use the funds in your HSA for non-eligible expenses, but if you do, you'll pay taxes on the funds used and be subject to a penalty. But don't worry, mistaken distributions can be returned to your HSA before the annual tax filing day, and all is forgiven. Just remember to correct the error before tax day. The goal of this video was to summarize some of the key concepts, advantages, and details of the HSA and HDHP plans. For additional information and resources, please view your plan materials.